All right, let's get right into it. Today, we're tackling a massive question in the world of finance. Is Bitcoin actually the new digital gold? I mean, really think about it. When wars start, when political tensions are through the roof, when it feels like the whole world is on shaky ground, investors run for cover. For centuries, that safe place was gold. But now, there's a new player in the game. And for a lot of people, the answer is Bitcoin. The idea is pretty simple, right? It's decentralized, not tied to any one country, so in theory, it should be immune to all the political drama, the ultimate port in a storm. But is that what actually happens? Okay, let's find out. So first, let's just unpack this popular idea, this belief that Bitcoin actually thrives when things get unstable. It's not just some random guess. It's a really powerful story that has captured the imagination of investors for years. This is literally how some have described it, an asset that doesn't just survive global turmoil, but actually gets stronger because of it. The idea is, the moment that gunshot of a crisis goes off, Bitcoin's price is supposed to soar. And you can totally see why this story caught on. I mean, you can look back at all these moments of global panic, financial crises, huge political upsets, conflicts, and it often looks like Bitcoin's price spiked right on schedule. It seemed like a direct link. But as we all know, just because two things happen at the same time doesn't mean one caused the other. So a group of researchers decided to go beyond the stories and the anecdotes. They wanted to rigorously test this whole digital gold theory to see if the data actually backed it up. Their work was published in this peer-reviewed journal, so we're getting a serious, data-driven look at the real relationship between Bitcoin and global chaos. Now, the most important part was how they decided to measure that chaos. They used what's called the Geopolitical Risk Index, or GPR. It's a pretty clever tool. It basically scans major international newspapers and tracks how often words related to conflict and tension appear. So, bottom line, a high GPR score means the world is on edge, a low score means things are pretty calm. So the researchers mapped this GPR index, this measurement of global tension, against Bitcoin's price over a decade. They focused on these major flashpoints you see here, everything from the Syrian war all the way to the global trade wars. The question was pretty simple. When the GPR index shot up, did Bitcoin's price consistently follow? And the answer they found was, well, let's just say it's complicated. That nice, clean story about Bitcoin being the ultimate safe haven, it started to fall apart pretty quickly under the microscope. And this is the absolute core finding. There is no simple, straightforward relationship. Sometimes Bitcoin acted like a safe haven, sure, but other times it didn't. And sometimes its behavior was just bizarre. This slide really lays out just how inconsistent it all was. Yeah, Bitcoin did act as a hedge during the US election and Brexit. Risk went up, and so did the price. But then you look at the 2014 Crimea invasion, nothing. It totally failed to act like a hedge. There was just no predictable pattern. But this is where the research got really wild. They uncovered something completely unexpected, a finding that kind of flips that whole safe haven story completely on its head. What if instead of Bitcoin being a follower, reacting to the news, the data was actually showing that sometimes the Bitcoin market might be a leader, like an early warning system? And this is a perfect illustration. The researchers found these specific periods where a big surge in Bitcoin's price came before a spike in geopolitical risk. Back in 2013, a price jump happened right before the risk from the Syrian war spiked. And it happened again in 2016. A surge in Bitcoin's price came before all the uncertainty around the Brexit vote. It suggests the Bitcoin market might actually be picking up on tensions before they even hit the headlines. So, what are we supposed to make of all this? We started with a pretty simple story, and we've ended up with a much more complex and, frankly, more fascinating picture. Let's pull it all together. The final verdict from the research is crystal clear. Calling Bitcoin digital gold is just an oversimplification. It is not a reliable safe haven that you can count on in every single crisis. It's more like a highly sensitive and sometimes predictive barometer of global mood. For investors, the big takeaway here is caution. You can't just buy Bitcoin and assume you're protected from whatever's happening in the world. Its relationship with risk is just too unstable. It can be a part of a diversified portfolio for sure, but it is no magic shield.
And for governments, the implications here are pretty profound. Instead of just seeing Bitcoin as a threat, they could actually look at its market trends as a valuable intelligence tool, an early warning of trouble brewing somewhere in the world. This points to a path forward, maybe not banning it, but developing smart regulations that can harness its predictive power while still managing the risks.
And all of this leaves us with the big question for the future. As this technology matures, are cryptocurrencies going to become a more stable, reliable indicator of world events? Or are they always just going to be defined by their own volatility, just another asset class getting tossed around in the chaos? For now, the data suggests that story is still very much being written.